ninth annual edition of India FinTech Forum's IFTA 2024.
When we are talking about financial literacy in schools and colleges, there are two aspects that come into mind. So the first is the entire ecosystem and the second is incentive. And in India FinTech Forum, we cater to both through our unique program called India FinTech Olympiad that we roll out for college students. Our title partner is AMFI with the very well-known tagline of mutual fund Sahi Hai. What we do in this whole program is we take a quiz program and do it both online and offline. We have an entire syllabus that our ecosystem partners provide, so all the students can get access to the financial literacy questions and anything related to the technology part. We have, during our sessions, we usually have a speaker, an industrial lead, who will be talking about financial literacy and money management. And at the end of the quiz, whoever passes a certain threshold, they would get a certificate. So that entire ecosystem from learning, industrial speak, as well as testing is covered. So this FinTech Olympiad is national level. It goes to different regional rounds and also online. We have the top contenders coming to the national forum. This is when we also hold our annual event called the IFTA. And so when the students come in at the same location as IFTA, they get to meet the CXOs of the industries, which is a tremendous networking opportunity. They get the visibility nationally. They get interviewed by media like CNBC TV 18 as well. And they get cash prizes. But most importantly, they get access to career guidance. So we do have a job portal for all these finalists to apply. Also, we do a job fair during IFTA, and we have instances of students getting hired then and there during the IFTA event. There's a lot of traction that we do through this, and last year we had nearly 44,000 participants who registered, and hope we will do better this year. And I think that's a very good structure that can be followed in other colleges and schools also. When we are speaking about regulators and promoting financial literacy, we actually have a very good role model. SEBI has a investors awareness program that is followed for every AMCs, the asset management companies, and which is very popular in the mutual fund industry. And it is a mandate, so nobody can get away without implementing this for the end customers. So we already have a live example. The very simple solution is take it up, fine-tune it according to the product and the industry, and all the regulators, if they actually implement similar awareness programs for end customers, we will have a generation of population who would be empowered to this knowledge. Thank you.
AI has a lot of potential. India can get unprecedented benefits from AI-driven financial inclusion and financial literacy initiatives. And a lot of projects in AI may or may not succeed, but we need to create a framework to decide which projects in AI would succeed. So we can use a 3D framework, which is to discover, then decide, and do. What are these three steps? So for example, in our wealth management context, the discover phase would involve going through the support tickets, going through the call transcripts or notes taken by the relationship managers, and any other transaction data that can help us understand the intent of a client or some of their unmet needs related to their financial goals. So that completes the discover phase where the AI tries to analyze all the relevant data. Then we go to the decide phase where we can analyze all this information and provide a relationship manager co-pilot. So based on market data, portfolio data, clients' goals, and their risk tolerances, we can figure out what would be a tax advantageous rebalancing strategy or a revised portfolio allocation strategy for a particular client based on the analysis which is aided by AI. And finally, the do phase, where we can automate some of the routine operational work so that the transactions and other execution steps can be highly automated but also accurate. If we can do all these activities in a seamless manner, then we will create real value for the end client. And if an AI project is not able to generate real value, then obviously it will not be successful and it will be discontinued. To evaluate the success of an AI project, we need to measure if the project has been able to cut costs or reduce the client complaints or generate higher level of trust in the service. If a project does not move these three parameters, then it is probably a toy project which will not be successful. So we need to measure the KPIs and see if we are able to deliver real value via using AI. Though AI gives us a lot of opportunities, there are also some risks. So now I will just highlight the broad level of problems or risks that we see with AI. The first problem is that AI can probably generate inaccurate information. Technically, it is called hallucination. And the second problem could be that it gets hacked in some way, which is generally via prompt injection and other methods. To address the first problem, we have to understand the implication of this issue. Suppose I am using AI to generate an equity research report on a company, and the LLM doesn't have a data point for EBITDA. Now it can generate a random number or try to guess a number, and then if I use that equity research report, then it will be a wrong information that will go out in the public, which is a risk to the company. So we need to ensure that the hallucinations are eliminated and they have to be done in an enterprise setting, otherwise it can lead to big consequences. And the second issue is that of injection, actually, where somebody could hack the system or do something to extract data that they are not authorized to take out of the organization. So red teaming and other options are available to prevent these security risks. In order to prevent these problems, we need continuous eval systems that can evaluate AI responses on a regular basis, both before the system goes live and also on a continuous basis when things are changed and updated by the tech teams. So we have partnered with an organization in US called Breeze ML that is able to provide a platform where these kind of evals can be run, and they are being that company is being led by researchers from Princeton University and UCLA, and they are doing a great job in this kind of technology. So by using technology properly, we can eliminate or at least reduce some of the risks with AI. Also, regulators are looking into it, and probably they can come up with some sort of certifications authorized by a few companies where the companies can evaluate the AI models and at least do a basic level of testing before these AI systems go live with important financial data. And that's very important so that people trust the AI systems and they deliver value to the overall financial ecosystem. Thank you.
When you talk about blockchain use case, is a foundational technology. It's not like something like mobile app or API, and that is how we look at foundational use cases like trade finance or centralized KYC or reporting of fraud. So these are those problem statements which are not being solved with the current internet. So that is how blockchain comes and helps banking ecosystem to solve some of those path-breaking use cases, business workflows. Say example, opening account. It takes 5,000 to 10,000 rupees for one account, and imagine more or less we have more than 2 accounts, and that's how we look at once you open a bank account at one bank, same process followed at the next bank. So imagine once you create account opening on blockchain, the same KYC can be reutilized with the proper rights and permissions. Now go back and identify multiple use cases similar way, like reporting of a fraud from one bank to another bank via RBI. It takes 45 days. With a blockchain, it can become a real time. And the latest use case which more than 34 countries are adopting, which is on a CBDC, that is a central bank digital currency, and it's on blockchain. While so far whatever payment ecosystem, financial ecosystems we have built, they are full of lot of reconciliation, settlement, disputes. But with a flawless implementation, with a better customer experience, I think CBDC is one of those path-breaking use case. Why? Because apart from tech, it is being adopted at multiple levels at multiple countries. When you talk about stable coins, it is not something like a digital currency or cryptocurrency. Stable coin is a infrastructure which can be utilized for doing a value transfer from one location to another location. In my view, it is one of the fascinating and top adopted use case of a cryptocurrency. The way I look at USDT or USDC are stable coins in US, and the majority market covered almost more than 90%. We can use the same ecosystem the way majority of countries are working on a CBDC with a stable coin coming into picture. And imagine if you compare the same transaction flow with the SWIFT or any other cross-border, which has lot of operations involved, it's time consuming and a lot of paperwork are involved. Imagine stable coin where you are sending one value or a currency from one country to another country where recipient, it can happen on the spot. So I think in longer term, with blockchain's features and functionality by which stable coins are being built, many countries will adopt. Example, US has started, and rather they have announced the Genius Act, or so-called Hong Kong or many other countries are following that railroads. So looking at the overall adoption, while majority countries are working on CBDC, the same countries like China or multiple banks are now exploring stablecoin opportunity. But bottom line, while stablecoin is there, it has to be well supported by right regulation, right policies, so that we need to know the complete customer journey and the source of funds. I think with all the technical features or functionalities or benefits, with right regulatory guidelines, I think stablecoin has a long way to go. I think when you talk about critical banking applications, banks are sitting in glass houses. What I mean to say that people and any of those corporates who are doing banking, they always relies on the banking institutions as a trust factors. So when you talk about private versus public blockchains, so typically in a public blockchain, anybody can be part of that ecosystems. And so-called private blockchains, it is a consortium of like-minded institutions. And when you talk about banking, use cases on blockchain, definitely we will always go ahead with the private blockchains. And when you compare these private blockchains with the traditional databases, imagine centralized database goes off. So we have a different mechanisms which do banks to follow, which has operational gaps. But with the private blockchain kind of use cases, we can give out much more better experience on better operational life cycles, or when you look at onboarding of those banks on private blockchain with a use case like trade finance or fraud reporting or central CKYC on top. So I think whatever we have built so far, every use case has a way to be implemented on blockchain. Depends upon how we will look at which are the first use cases. But in a bottom line, compared to traditional databases, I think private blockchain will supersede over a period of time. Major difference between CBDC, so-called e-rupee in India, and UPI is that UPI is a payment method, and e-rupee CBDC is a complete infrastructure, like how the money will be minted on digital currency methods and how it will be moved from Reserve Bank of India to the banks and to ultimately the peer-to-peer for peer-to-peer payments in those wallets. CBDC is a digital infrastructure for managing currency. More than 130 plus countries are working on it. UPI within India, it is one of the payment method riding on an existing method of paper currency which is being printed at RBI's institute and is moved from a central bank to the treasury of a respective bank. So it is very operational pro, it takes a lot of its time, and imagine the way we have a cash which is a complementary to CBDC. Managing cash or printing cash is not so cost effective. And when we look at CBDC, we look at the future of finance with the CBDC. The transactions done today by persons, tomorrow it will be done by machines. So when we are in the era of intelligent or autonomous banking, we need similar kind of a fast, safe, secure currency. So CBDC is ultimate answer for that.
9th Annual Edition of India FinTech Forum's IFTA 2024.